All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, we're going to be talking about SPYT. It is the Defiance S&P 500 Income Target ETF. Basically, it's got an income target, a new S&P 500 income ETF with a target of about 20% or so to put back into your pockets, paid out monthly. What we're going to do in this video is I'm going to talk a little bit about their strategy. They'll be using daily credit call spreads on the index, which is going to be the S&P 500. We'll get into that. What I want to do is compare it to JEPY. And the reason being is because JEPY is on the S&P 500. It is called an enhanced option income strategy ETF. Basically, the difference is that SPYT, to be exact, uses daily credit call spreads on the S&P 500, and JEPY uses option premiums on the S&P 500. So what we're going to do is we're going to talk a little bit about each, and we're going to compare some charts just to kind of see what we could expect out of SPYT in the future. So without further ado, I do want to say, if you guys do enjoy this video, please do remember to subscribe to 4,193 subscribers. This video is brought to one of our members in the community, PS60W. Yes, I said that right. He or she said, please make a video on SPYT, bro. Well, bro, I got you, man. Don't even stress about it. So what we're going to do in this video is we are going to digest that. I appreciate the little video suggestion. And without further ado, let's get into it. So SPYT, just kind of reading over here, it says it aims to achieve a target annual income of about 20% on the S&P 500 using options paid out monthly. Options being these selling of daily credit call spreads on the index. Now, I'm not super aware of what daily credit call spreads are, to be exact, but I did a little bit of research, and it said here that daily credit call spreads they thrive on stability, meaning that if the price movement does not exceed about 1% in either direction to the up or the downside, it works well for the strategy. And I think that would work well for the S&P 500. The S&P 500 is generally kind of an index that trends up for the long term, as you could see, and it's an index. It's not necessarily super kind of in tune to massive fluctuations in the market because it literally is the market. Now, you could see here that over the past little while, the past year or so, it's increased pretty steadily and by a significant margin. It looks here about like 20% or so, which would work for our strategy. We want small increases over time. That is exactly what you want when you're running any kind of strategy, whether it's a daily call spread strategy or it is a cover call option premium strategy. Now, what I want to do here is just kind of look at JEPY, because when we look at the past performance of JEPY, you got a stock that was trending at about $20 all the way down to about $17. Now, that is a realized loss of about 13% or so. I kind of did the calculation beforehand. So you could see here that down from $20 to about $17.44, that's about a 13, 14, 15% loss, somewhere within that range. And they actually currently have a dividend yield of about 40%. Now, what SPYT is going to have is they're trying to aim for a 20% dividend yield. Now, with this 20% yield, what we could expect for the stock price of SPYT, I would expect it to stay relatively flat, or it could potentially trend a little bit down. The reason being is because JEPY has a 40% dividend, and we could see here with a 40% dividend, the increases in the underlying stock, even though the S&P 500 is going up over time, they're not enough to outweigh the dividends paid out by JEPY and from the options premium strategy. You can see here that over time, the strategy will go down. The S&P 500 has been in a bull market for the past 6 months. And when we look at the past 6 months of JEPY, we could see a downtrend. Now, what I want to say is for SPYT, if the S&P 500 kind of continues in this uptrend, which it may not, there are some recession fears as we kind of peak in the markets. But what I would say is that with this 20% dividend, it's obviously a much less dividend than we see in JEPY. So what we could see is a bit more of a stable price return from SPYT, which I think would be good. but I wouldn't expect much in terms of capital appreciation at all from any kind of fund that's, paying out a 20 or even a 40% dividend. So that's just a little take on what I think the share price might do. I think it might be relatively flat to slightly down for SPYT. Then again, it also completely depends upon the S&P 500, how it performs. If the S&P 500 goes down, SPYT will go down, and so will JEPY, so it doesn't matter. Now, pretty much that is all I really had to talk about for this. I could read a little bit more here. They do say there is enhanced potential yield. That is due to the fact that they pay out a 20% dividend. Of course, all of these Defiance ETFs pay out pretty big dividends, but there's also that potential for more stable price returns with SPYT. Now, their income generation, let's just read this. SPYT's investment approach is meticulously designed to generate income through option premiums derived from selling index call spreads. The primary driver of the fund's yield. We sell at the money or near the money call spreads to retain upside growth potential and aim for a target annual income level of about 20%. You can see here where they say we sell at the money or near the money call spreads. They're obviously referring to the fact that they're looking for very small price movements when looking at the S&P 500, which does kind of align with the main strategy when using call credit spreads, which is you want small price movements within the underlying stock, which will give you that big dividend, that big 20% yield, while hopefully retaining that stock price. So this was just a little video on SPYT. I never wanted to make this a super long video, just a short video to kind of go over my thoughts about the stock, something that I was kind of brought to my attention by a member of our community. I wanted to give you a little comparison on how it might compare when looking at other Defiance ETFs that have been out for a little while. I do think that it's going to trade more sideways to potentially down. So one thing to keep in mind is if you are going to invest in SPYT, your capital might depreciate, but the dividends should hopefully make up for that. And just to kind of point this out here, I do own QQQY, which is one of the Defiance ETFs. If I go back here, and if my screen goes black, if I could show you that here, it is one of the Defiance ETFs, but it has actually done fairly well for me as I'm only down about 15%, but it has been paying me about a 50% dividend for the past year or so. So that's something to keep in mind as well. So without further ado, I hope you guys did enjoy this video. That was pretty much all as my computer decides to glitch here. With that, I will say I hope you guys do subscribe. We're up to 4,193 subscribers. Please do so if you guys did enjoy this video. I hope this served you well. I hope this gave you value, and I hope to see you guys in the next video.